Christy Teal with McKenna Control.
Michelle Drew with McKenna Control.
Peter Rockington, Internal Audit.
Mike Chadwick, Internal Audit.
Pamela Ellis, Municipal Audit.
Elby Gray Jackson, Chair, Municipal Audit Committee.
George Vacalis.
Adam Trombley-Sim.
Elizabeth Judson, Clerk's Office.
Thank you. And the main purpose of this meeting is the contract required exit conference with the auditors before we receive the audited financial statements formally at the, I think, June 18th Assembly meeting. So Michelle, the floor is all yours.
Great.
Thank you.
Thank you. I guess, as usual, let me begin by saying we want to thank you for your business. We really do appreciate being able to work with the municipality of Anchorage, and definitely appreciate everyone's cooperation and assistance and hard work and effort. It takes a village to put this together. I think that's a pretty true statement. The Controller Division is absolutely instrumental in pulling it together. Internal Audit is extremely helpful through providing staff and some direction on areas of risk and your internal audit reports. And also the program people. A lot of program people. We did a lot of single audit and grant testing this year. So we were out in the field quite a bit talking to different people, and definitely appreciate everyone's assistance. So there is a plethora of paper in front of you, and so I'm kind of going to go through them one by one. So the first document is this report to the Audit Committee, which is in the center of the table if you don't have it already. This is our housekeeping document, but it includes the required disclosure elements under professional CPA accounting professional standards of what we are required to report to you as the Audit Committee. It's mostly a housekeeping document because it's kind of more of the administrative stuff, but I'm just going to go through it really quick. Starting on page 1, a quick highlight. There was a change in accounting policy at the municipality this year. It's due to a change in the accounting rules. This is something that we've had to implement across the board at every single client. There were 2 new GASB statements, 63 and 65. And so the end result for these financial statements are that on what used to be the balance sheet has been retitled to a statement of net position. There are some new kind of categories, deferred outflows and deferred inflows, rather than your traditional just assets and liabilities, which they're really more of a kind of a subset of assets and liabilities. And then in addition to that, there was a statement 65, and 65 is a companion statement to 63. So 63 had some basically formatting changes to the balance sheet, and then 65 had a number of specific rules about which elements would now live in those new subcategories that were created. So one of the things that did cause a change for the municipality is under GASB 65, if you issue debt, under the old rule, the cost of issuance of debt was recorded to the balance sheet at the full accrual level, at the government-wide level in the enterprise funds, was recorded to the balance sheet and amortized over the life of the debt. Under the new rules, the GASB has come through and said, if you issue debt, bonds, revenue bonds, long-term loans, whatever, if you issue debt, you have to expense to your budget in the year that you issue the debt. It has to be a direct hit to expense. So that was a change. So those statements were required. There's no election to implement. You're required to implement 63, and because 65 is the companion statement, it was implemented concurrently. In addition to that, there was a prior period adjustment this year tied to the Port of Anchorage, and it had to do with a detailed analysis of what was living in CWIP, construction work in progress, at the port. So there was identified certain debt issuance costs and legal costs that had been capitalized into construction work in progress, and those were pulled back out to reduce construction work in progress. The next section is significant or unusual accounting transactions, and we have this category in here every year. This is specifically for the purpose of, were there any transactions for which there is really no good guidance? And that is not necessarily the case. What we put in here are things that are just a little bit atypical. Now, just because it's atypical and just because it landed in here doesn't mean it's a bad thing. It just means it was a little bit not in the ordinary course of business, something unusual about the transaction. And the first item on that list is that there was a land swap, a land exchange. And the funny thing about this is the actual purpose for this transaction that hit the FY12 accounting rules was back how many years ago? Somebody help me out here. How many years ago when the state wanted to expand the Merrill Field corridor? So that piece of it happened quite a long time ago. The issue was the municipality owns the frontage along the corridor, and the state wanted to expand the road, so needed to take a piece of the land, right? So that was allowed to happen, and there was an approval to get that done to get the project done. In the meantime, there was actually an act that was literally winding its way through Congress at Washington, D.C. to actually allow that transaction to happen. And so the transaction was in fact fully consummated during 2012, and it was pretty complicated. The fire department because the airport is not allowed to lose land, period. I mean, that's the gist of it.
Well,
The
that
airport.
has to do with the federal funding that
Right.
was aligned. So
Right.
in order
Right.
to just interject that
No,
piece,
sure.
so it makes a little bit more sense.
Mhm.
There was federal funding involved in a lot of the land purchases in the past, and in order to
Mhm.
satisfy the grant requirements, we had to
Mhm.
have that approval of the land swap for certain pieces
Right.
occur through Congress.
Right. So the long and short of it is, in order for the airport to be made whole with its actual land acreage, there had to be other lands given to the airport as well as the cash that was paid by the state. And it was a bit of a complicated transaction. We spent quite a bit of time auditing that transaction. At the end of the day, it's completely reasonable. It appears to be correct. There's no problem, but it's a little bit unusual. The next bullet point there, as everyone is aware, there has been a work stoppage out at the port regarding the port expansion project. And so from our side, it's just important that we want to call it to everybody's attention because there has been a work stoppage. We know there's litigation associated with it, and we know that there is some potential for impairment on the project. But at this time, the administration has not been able to quantify the amount. And again, because there's litigation in play and things going on with that, not able to quantify the amount of the impairment. So there hasn't been at this point any write down of the project. So it's still sitting at its historical cost. And then the last thing on this list is associated with ML&P. In 2012, they recorded an asset retirement obligation, and this is kind of a new thing. The municipality hasn't done this previously. Of course, most governments don't operate gas fields, but ML&P is involved in gas field operation. And one of the accounting rules that are typically tied to gas fields, which again don't normally happen in the government arena, one of the issues is the cost of decommissioning the field is actually quite substantial. And so the accounting rules on the for-profit side actually dictate that you record the cost of that decommissioning up front and amortize it over the life of the field. And so this year was the first year they did an implementation of the ARO accounting. There is actually no GASB statement that governs this, but it is clearly defined in the FASB, which is the for-profit accounting rules. And in addition to that, ML&P operates in a regulated environment where they follow the FERC, the Federal Electric Regulatory Commission rules. It is also clearly delineated in FERC. So there was no making it up as you go or anything. It's how it was recorded was very, very clearly lined out. It's just not something that's codified in GASB. So, but the issue itself was very clearly lined out.
Right,
We did a good job.
if I may, I think everybody here knows that ML&P has been part ownership in the Beluga gas fields
Yeah.
for years. So
For
this is
years.
nothing new.
No.
Yeah, thank you. Michelle.
Yep. Sure, no problem. 5 million something, like 5 million. And it's actually, and the way it works, the accounting's again kind of complicated because they're regulatory. We record the liability, but it doesn't hit expense. It doesn't have a budgetary impact. It's offset through their regulated accounts. So there's no effect to the bottom line on that. There was, throughout the course of the audit, only one audit adjustment. It had to do with the wastewater fund, and it's actually in this report on page 6. And it actually had to do with a reclassification of interceptor expense over to intangible plant, this capitalization. So, but this was the only entry that was posted during the course of the audit. And then the next item is past adjustments or uncorrected entries, because the accounting rules do allow us to pass on any entry that we deem not material. And those are spelled out on the last page of this report, and there were 2. It looks like there were 4, but it's the same 2 twice. based on opinion unit on the very last page. And this actually is the first one had to do with the fleet fund and a true up of depreciation in the fleet fund. And the other one is in the wastewater fund. And for those of you who've been on the audit committee for a long time, this is the one that every year is there, and it's slowly, it gets reduced every year. It reduces, and it goes all the way back to GASB 34 implementation. So next year, I think, will be the last year you'll ever see that on here. So, and then it'll just go away, and it will have worked itself out to zero. So, and then other than that, the rest of the items on here, no difficulties in dealing with management. No disagreements with management over GAAP or accounting principles. Everyone was very cooperative, and definitely, again, we appreciate everybody's hard work and effort to pull everything together. So then the next thing I'm just briefly going to talk about the actual CAFR, just brief, high level on this, and then we'll get to the other two documents. Basically, in a nutshell, the audit, the CAFR this year, on page 1, which should be behind the financial section tab, this is the auditor's report. And this is actually, you'll notice our report just keeps getting longer and longer and longer. So we're up to, 4 pages. So, but the long and the short of this is, it is a clean, what we call an unqualified opinion. It is a clean opinion, which means, in short, that as the external auditors, we do believe that these financial statements are materially correct. Again, they're not perfectly 100% to the penny correct, but they are within a reasonableness. They are materially correct, and you can rely upon the information that's in them to make decisions. So then I'm going to skip through all the government-wide stuff and go over to page 26 for just a few minutes. This is your governmental funds balance sheet. And I'm on this page, I would just quickly call out fund balance in the general fund. It typically, page 26. Fund balance in the general fund tends to be an area of interest, and so for this purpose, for the external reporting purpose, the general fund is comprised of all of the general fund, 101, 151, 141, and all of the associated subfunds all aggregated together in here. So fund balance ended at 81.8 million, and out of that amount, 17.2 is unassigned, not tied to anything. So that represents about 2.7% of your total expenses for the year. It's significantly less than 1 month's expenditures. However, remember that the municipality does have a code that has a restriction for a bond rating reserve set aside, and that's actually living in the committed category. The 37 million is the bond rating set aside.
It's a policy.
Policy, not in
yeah.
code, sorry.
That's okay,
Apologies.
thank you,
Apologies.
Michelle. Thank
Yeah.
you.
So although the unassigned portion is a pretty low amount of the actual budgeted operating expenses, there's a little bit of a cushion there with that bond rating reserve, which you don't want to tap into because it's important to maintain your bond rating, but in a dire emergency, that resource is there to support the city. So the other governmental funds, the MOA Trust, Capital Projects, Roads and Drainage, and then over on the next page, 27, you have the total of all the governmental activities, governmental funds, almost $500 million in assets, 130 million in liabilities, 37 million in deferred inflows, which again are this kind of new subcategory of liabilities, and then total fund balance $329 million. On the surface, that probably doesn't tell you much. If you flip over to page 29 and 30 though, I would draw your attention to 3 lines up from the bottom, net change in fund balance. And that shows you actually where you came in terms of your revenue relative to your expense. So every fund except Capital Projects, Roads and Drainage basically added to the bottom line for 2012 on a GAAP basis. And the Capital Projects, Roads and Drainage, the $5.2 million reduction, that basically equates to spending, like budgeted spend down of matching grant for capital grants, matching or projects that are funded wholly by the municipality. So those are like anticipated spending of fund balance. And then really briefly on page 36, I'm just going to talk really briefly about the enterprise funds. And if you look again, the third line up from the bottom, which is the change in net position, and if you just go all the way across, all of those numbers are in the positive. So basically what that's telling you is every fund actually had a positive revenue in excess of its expense, including covering the depreciation, which is excellent. So you're covering your costs as well as covering your operations, and that is actually after the transfers out, which includes the MUSA and the subsidy, back to the municipality or back to general government. Remember, I already mentioned a couple times, the MLMP operates in a regulated environment, also the water utility and the wastewater utility as well. So as part of their regulated environment, they actually have a pre-established kind of a rate of return. It's not a guarantee that they're going to add to the bottom line, but it is a managed rate of return so that they are regulated in such a way that they set rates to cover their cost with a certain element of profit built in.
Michelle?
Yes, yes.
Could you just clarify something for me?
Sure.
Okay. At the end of 2012, what's the audited fund balance for the 5 largest funds?
That is
'Cause
not in. That's not in here.
Okay.
Yeah, and
That's why I'm
Yeah.
concerned
Not the
about the
5 million.
detail statements.
Yeah,
You
I'm
know
new
what I
to the
mean?
5
Because I
major.
really want to know that number.
Okay.
Okay. Thank you, Michelle.
Okay, sure, no problem. So again, all of the enterprise funds did add to the bottom line, and then once you move out of the regulated utilities, the port, refuse, solid waste, they also did add to the bottom line in a modest amount before you take into consideration the spikes that occur when you have capital grants. So if you look from the change in net position and go up 2 lines, you'll see that $6.5 million number. So if you look at the other enterprise funds and it says, oh, well, we added, $10 million to the bottom line, your first question might be, well, are we gouging our customers? Are we gouging our ratepayers? But that's not the actual addition to the bottom line from rates, because $6.5 million of that is a one-time spike of capital grants that came in the door. So if you back that out, the total is about $4 million across the non-major funds. Yeah. And then the last thing over on page 37, really again briefly, the internal service funds. All of the internal service funds, and you have 5, there are 3 risk-related funds, equipment maintenance, and then IT. All 5 had positive increases to fund balance for the year. The general liability fund, however, despite it had revenue over expense in the positive, so it added to the bottom line, it still remains in a deficit position. So 2 of the risk funds actually came into 2012 with deficit positions.
Sorry,
Yeah,
when you
yeah,
say
please.
risk funds, what she also should say is our self-insured funds.
Self-insured funds.
Like
Right,
607?
Mhm,
And
mhm.
what's
No,
your?
607
60
is
What are-
an internal service fund.
Right, so what are the 2 funds?
The 2 internal service funds, which are fleet and IT,
Okay,
we have a total of 5.
right.
The other 3 are self-insured
Right.
funds. One is deals with risk, which is our workers' comp general liability fund.
Mhm, mhm.
The other 2, I guess, are considered risk funds, but there are self-insured funds,
Yeah.
which you are probably more familiar with. I saw you were a little confused, so.
Actually, I wasn't confused, but thank you,
All
yeah.
right.
And-
And just as a reminder, we had that major payout in settlements for
Yeah.
the
Mhm.
Right,
I
right.
didn't mean to interrupt.
Right.
So the detail
Thank
of
you.
that is actually I know I'm not going to go through it, but if you're interested, the detail of that is under the internal service funds tabs, and the income statement is on page 134 and 135, so you can see what's going on. So just high level in summary, pretty much every fund had, a positive increase to fund balance or net position for the year. The funds that started the year in a deficit, one came out, one remains in, but there was definitely some addition there. And the enterprise funds seem to be doing, healthy as far as covering their costs, including depreciation. So, yeah.
And you did say 2 internal service funds did not have that issue, fleet and IT, am I correct?
Yeah, well, there's 5.
I know there are 5,
Yeah,
yeah.
so there's 5. 3 of them are risk funds, and then
Right.
fleet and IT.
Right.
2 of the funds had deficit. They came into 12 with deficits.
Okay, which ones were those? Is the
I
question.
thought there was the 2 risks, general liability. Yeah, 2 of the risk funds.
Okay, all right.
Yeah.
I just want
Yeah.
clarity for everybody, so thank you.
Yep.
Yeah,
Okay.
thanks.
So that's kind of the high level on the financial part. So then the next thing I want to talk about is the single audit. And the single audit document is this one floating around, but we're just going to talk about it from this sheet really briefly. So the colored sheet. And so what we tried to do is just put together a trend so you can kind of see where things are going. For 2012, the municipality spent $45 million in federal grants. Spent, not received, spent $45 million. And then on the state side, $124 million. You can see there's a pretty big jump between 2011 and 2012. There was quite a big jump in the state grants. So the state really shook loose the money tree in 2012. And then the next page actually shows the number of major programs that had to be audited under the accounting rules. So in 2012, it was 9 programs on the federal side, which that 9 programs is actually made up of 82 separate grants. And then on the state side, it was 50 individual grants. And then that compares with like 15 major programs in 2011, but that entire 15 was still only made up of 80 separate grants, so, and 37 on the state side. So you've got, I mean, the point of it, you just got a lot of grant activity. There's a lot of grant activity. Yeah.
So, since you mentioned a lot of grant activity, and I'm glad you have, because it's obvious from
Mhm.
state grants from 2011, 37 to 50, what about the fee for the audit?
Yeah,
because of the
yeah,
additional grants.
Yeah, we're a little over budget.
Okay.
Yeah, we're definitely a little bit over budget, and I kind of need to sit down and do some analysis and maybe, get with you as far as, some kind of compromise position on that. But
Okay.
yeah, we're quite a bit over budget. In the last few years, the budget itself was actually established because the last time the audit was out to bid was prior to 2008, and so the budget itself was based on the 2007 numbers, and the 2007 numbers were something like 15 state major programs and like 6 federal, so every single year there's just been an enormous jump.
Right.
Yeah.
And I'm aware of that.
Yeah.
And so, can you give us today some idea, like an estimate of how much over budget?
Well, I mean,
because that's going to be a budget amendment,
Yeah.
regardless. And hopefully, like you just said, you're going to make a compromise. But what are we
Yeah.
looking at?
Well, right now we're in excess of $50,000 over,
Okay.
but there's no, I'm sure we wouldn't bill you that much. So that's where I'm like,
And I
kinda
just
need to-
appreciate hearing
Yeah.
the facts.
Yeah.
Yes, because I knew there would be some change.
Yeah, a little
And you
bit.
and I talked about that earlier.
Right.
Yeah, so,
Right.
yeah.
So-
Thank you.
No worries. Okay, and then over on the next page, we have actually kind of the results of the single audit. And this year, and this bears just a little bit of discussion, we did actually issue a qualified opinion on compliance specifically for the Child Care and Development Block Grant Program, and all the other programs were unqualified. So all the other programs, we didn't have any problems at all. This program particularly, and it's important to kind of maybe note, the municipality is not administering the child care program anymore. In fact, it went away after June 30th. It went away on June 30th. Part of the reason that the opinion ended up being qualified is every year for the last 3 or 4 years, that program has been selected as major. It's required to be selected as major. We audit it, and it has a million nitty-gritty detailed rules. And so every year this program has had findings, minor findings, eligibility determination, incorrect income calculations, timely filing, because from the time an application comes in, the municipality is required to take action within 30 days, and things were going past the 30-day mark or whatever. Every year there's been a finding for this. This year was a little bit complicated because it's a state-administered program, and at about the point of transfer, speak English. At the point of transfer, the municipality is no longer administering the program, but the program continues, and it went to a local nonprofit organization. So at the direction of the state of Alaska, all of the files were transferred from the municipality to the nonprofit organization. And I will say, in fairness to everybody, from the controller division, and particularly the grant accounting supervisor, the department at Health and Human Services, for the city and the nonprofit as well as the state, everyone attempted to be cooperative and to do what they had to do to let us audit this program. But despite all the cooperation and the fact that a lot of people had to actually get involved to produce those records, we ended up having to go to the nonprofit to actually audit the records. Despite that, there were a number of files that just somehow were lost in the transfer. They're just lost. They're missing altogether. So there was really no way for us to render a clean opinion on the program when we did a sample of 60. We pulled 60 files, and 9 of them are completely missing. So I'm like, on the one hand, this looks really, it's like qualified opinion that's really bad. Within the context of what happened, and the transfer and everything, like I said, it's hard for us to say, well, this is really the municipality's fault, because the files were transferred. Who knows if they were lost on the other end? But at this point, we just can't even get to the place that we can make a determination that it's right. Yeah.
So, because you had to do an extra step, you had to go to the nonprofits. Is there an additional cost involved?
Well, that's
part of this?
It's all inclusive
Okay.
in that.
I just
yeah.
thought I'd ask.
Yeah.
Because it makes sense.
Right,
I mean, yeah,
right.
this is
A little bit.
an extra step.
Yeah, exactly.
Okay. So can we make the nonprofits pay for it? Just kidding.
Yeah. You
It's
can
all
try.
good. It's all good.
You can
No,
try.
it's all good. Thank
Yeah,
you, Michelle.
Sure. And there.
You mentioned that the program was no longer administered, and was that June of 2012 or 2012?
Yeah, June 30,
Yeah.
2012 is when it
Thank you.
terminated. Yeah. So then we have the next section is the government accounting standards, and that has to do with the financial statement side. So we have no findings, no non-compliance, and no reportable internal control deficiencies associated with the financial reporting piece. On the federal grant side, there were 2 findings inclusive of this child care. And both of those findings, actually, one was for child care assistance, and the other one was for child care licensing. So licensing you are still administering going forward.
Right.
Yeah. And so so there were 2 findings for that, and then on the state side, on the state grants, 50 grants later, there were no findings there either, so that's good.
So what were the findings?
So the findings
Next page?
are on the next
Cool.
page. Yep.
Thank you.
So the first one again is the one that has the qualified opinion. The overarching category is eligibility, but within the guidelines from the state, eligibility includes the income determination, records retention, timely application timely filing of the applications, as I kind of already mentioned, then as well as the records retention of being able to locate those 9 files. And the detail of that is in the single audit, in the back section of in the single audit. And then the second finding was for the licensing program, and it actually was a special test and provisions is the overarching category where the violation happened, and it also was records retention. And basically what it had to do with there was the city issues the approval to get the local license. When a licensee goes out of business and shuts down, the city is actually required to keep the records for 6 years, I believe. And what was happening is as soon as the licensee was going out of business, the files were archived off elsewhere, and then they couldn't be located. So it's just an issue of having those available. So that's the single audit.
Just a question on that.
Yes.
The 6-year retention, it doesn't say where they have to be retained as long as you can access them, right?
Correct. And I think for our part, the issue was they couldn't
Yeah, they went to the records holding area, and when they went there, they couldn't find them.
them. Yeah. So right. Okay. And then the last thing is just the letter to management. And again, I want to speak clearly that the issues that show up in the management letter are just observations and things that we found, or things for the municipality to consider. they don't begin to rise to the level of a material weakness or significant deficiency. They don't begin to rise to a level of a finding, just things to be considered. So the first item on this list has to do with Fund 141 special assessments. And while we were doing the audit, we noted, it's an assessment receivable, but it has a credit balance. And we did some test work and investigation. At the end of the day, what we discovered was several people had in fact prepaid their assessments. So, our recommendation is technically if they've prepaid, we just need to research whether this needs to go into income for the year or whether it needs to be reclassified back to a liability because the municipality still has an obligation, but it really shouldn't be levying in accounts receivable. So, something to investigate going forward.
And just to note, we passed on that adjustment. We were well into the preparation of the financial statements, and the dollar amounts involved were about $75,000 for water and $75,000 for wastewater. For refuse.
Yeah, it wasn't material.
It wasn't material, so it was a total of $150,000 for sewer operations. So, so anyway, but Michelle's point is that these credits can continue to grow, and she's right. We should put procedures in place to.
Thank you.
The next comment is the solid waste services and refuse billing, along the same lines with the special assessments, not exactly tied to the same reasoning, but it was the same thing. In reviewing the billings, we noted some prepayments that were living in the accounts receivable. The reason we highlighted this is this kind of the same topic as the special assessments, but in the case of solid waste services, they're actually trying to implement a new billing policy where every single person is not being billed on the same day all year for every customer. So they're trying to do like a phased in, as new customers come online, they're on a different cycle billing to kind of smooth out the workload associated with billing. So our concern there is as that the process change is fine, but because of the process change, what we think is going to happen is the amount of people who have prepaid based on your cutoff date is actually going to get bigger and bigger and bigger. So it's going to be really important for solid waste services to go through and pull out the prepayments and actually get them into the right place on the balance sheet. And then the last,
This is just all balance sheet moves,
Right.
right?
Yeah, just balance sheet.
No income
No
statement
income effect.
impact. It
Yeah.
just has to do with how we're having to classify things on the
Yeah,
balance sheet.
yeah, that's correct. Housing and urban development, the HUD loans, the municipality some years ago administered these low-income loans under a couple of different programs that allowed for home improvements or allowed people to buy homes who were otherwise low income and not able to do so. The terms are very flexible repayment. The program specifically that we kind of had a little bit of an issue with is one where the homeowners do not make payments unless they vacate the home. So either they move out or they, if they pass away, if they move or they sell the place or whatever, that's when the payment comes due. And I believe that even pursuant, and help me out here, pursuant to the regulations under HUD, passive monitoring is all that's required.
That's correct.
Okay, so under the program regulations, the municipality is doing what they're supposed to do, which is passive monitoring, which means that the title companies, whenever there's a sale or a transfer, the title company would actually report to the municipality that there was some kind of a change in the property, right? So I think from a regulatory standpoint with respect to the grant, I think the municipality is in compliance. The issue that we were trying to raise is we went through and just kind of on a test basis for accounting purposes said, okay, we're going to take a test of all of these homeowners, run a sample and see if we can verify that they're still there. And we ran the sample and we were not actually able to verify that all of the homeowners were still in homes. So from a regulatory standpoint, I think there's probably not a problem. From an accounting standpoint, we just want to make sure that what we have on the books is truly reflective of what the program should be and that the receivables ultimately are valid. And again, just as Pam said with the earlier comment, this really doesn't have a income statement effect either because the loans, the accounts receivable, are actually offset with deferred revenue. So it's not like we have a big uncollectible, we're going to take a big hit to revenue or we're going to take a big expense even if we did write them off. The question is just in the aggregate, the HUD loan programs exceed it's more than $6 million. So there's $6 million worth of loans sitting on the books. So, just from a standpoint of accounting, we just want to make sure that what we have on the books is valid on a go-forward basis, and if not, they need to be adjusted off eventually according to whatever the program rules are. Just kind of, if they're not going to pay.
And this is an interesting one because when this has come up before, and when it came up again this time, we went back to the HUD administrator, and they said, no, this is exactly how we want you to monitor it. And so it is passive. So we get notified after the fact, from the appropriate mortgage company. So it is what it is.
And he respectfully disagrees with the auditors, and that's okay.
No.
That's okay.
I understand exactly what you're saying.
Yeah.
And I understand why you're saying it. All I'm saying is that the program, the way it's set up, that we have to follow, doesn't look at that, okay?
Mm-hmm.
So that's all I'm saying. What they look at is the notifications, and like I say, after the fact. So they're not, by rights, you'd set it up like a regular mortgage,
Right.
and if you were loaning the money, you'd set it up and set it up that way. But that's not the way that they want us to set it up. So, and this has been looked at twice by ourselves to see about that. So, and the most recent one, just when these comments came out again. So,
Sorry.
Well,
no, that's all right.
yeah, well, it is what it is one of my common statements too, Chipper, so I understand. Does anybody have any questions on that? Okay, thank you.
Okay, the next issue, network access, and I think we've had this comment the last few years. It's just really tough to get everybody terminated from the system when they leave employment with the municipality. They should have their access turned off, and that doesn't always happen. It doesn't always happen timely, and it doesn't always happen at all. But the good news there is, despite the fact that people didn't have their access actually terminated, we didn't actually notice somebody who quit and then actually did go in and access. There was no access after the termination date, but still they should be turned off, yeah.
Yeah, and like you just said, Michelle, this has been an issue for years. And in my opinion, we need to fix it. Because when somebody leaves, they sign a bunch of paperwork, they turn in their keys, and this access should be turned off at the same time that their keys are turned in. And that's how I see it. Thank you.
So then the next issue has to do with payroll and Kronos, and we did we put this in here. Okay. The primary goal of the external audit is to ensure that the CAFR, that the externally published financial statements are materially correct in accordance with the accounting rules. The primary goal of an audit is not to make sure that every single process operates exactly perfectly every time, or is effective or is efficient. But one thing that we do as part of our external audit process is to try to respond to risks that come up. And when people bring to our attention risks that they believe are out there, part of our job is to try to adjust our procedures accordingly and be responsive to that risk. So Kronos, clearly this in 2012, had a lot of public discussion, about, I'm sorry, I'm kicking you. A lot of, yeah, sorry.
Everybody knows
that. Sorry.
That was part of the discussion.
Yes, apologies. Yeah, I know, sorry. A little comic relief there. So there was a lot of public discussion. In fact, numerous individuals, including yourself, Albie, came to
now
us.
I'm exposed.
Yes,
Thank you,
I'm
Michelle.
sorry. Well,
It's all good. I was going to tell it all myself.
Yeah.
Getting weird here.
Yeah, you were not the only one. Actually, many people came to us and said, did you find something wrong with Kronos? Many people came to us and said, have you found something wrong with Kronos? And so again, with the backdrop of, our primary goal is to make sure that the external financial statements are materially correct, but also understanding that a big chunk of your budget is payroll, right? So with that kind of as the backdrop, we had actually come in December, and we did our initial payroll testing in December, and we didn't find any errors. And that was maybe even a little bit, I don't know the exact timeline of when all of the news media and kind of the big kind of public debate kind of happened. But when we showed up to do the audit, and then we started getting these questions, did you find problems in payroll? Did you find problems in payroll? I made a decision at that point that I'm like, okay, I want to make sure that we understand what is going on here, because with so many people saying that something isn't right, we need to make sure that our file is complete and that we really have a good understanding of what the process is, how it's working, and that what we tested is responsive to where the risk is. So this comment is kind of just to kind of line out what we did. So what we did our initial payroll test work, and the process there is to start from timesheet through the system to GL. And in doing that test work, we pull the timesheet, we pull the personnel file, we look at pay rates, we don't do all of the benefit calculations. I mean, we don't test every single benefit calculation for everything, but we start from timesheet through the system, what actually hits GL. Did it hit the right code? Was it charged to the right grant? Was it at the right pay rate? Do the hours look like they agree to the timesheet? And that's the test as it works its way through. So after this kind of came up, we went back to the departments, and I'm specifically going to speak to APD, AFD, and transit, because it seems like that's where the biggest maybe I don't even know the right word. Those are the biggest public discussions seem to be around, because they have another system besides even Kronos. They each have scheduling software, and APD and AFD use something called Telestaff, and transit uses something called Teledriver, and those scheduling softwares are exactly what they sound like. They're how those departments keep track of who's on duty, when they're on duty, what their on time is, what their off time is, you know, what shift they're on, what they're doing if somebody calls in sick, who's the next person in the rotation. They use it as very effective for how they do their departmental jobs. Those programs are computer programs. Kronos is a computer program. There is an interface, a setup, a connection between the two programs. And what it appeared to us from all of the discussions and comments and whatever is that there was a lot of discussion that the connection point between the two, certainly at the start, wasn't adequate, or they just weren't talking to each other correctly. And so as a result of that, the payroll staff at the respective departments had to do a lot of manual interference. So there were actually people in the process, whatever Telestaff or Teledriver spits out a report, and then Kronos spits out a report, and then there's a person who manually goes through and compares and corrects. Any corrections get processed through a manual process. Then it goes from that manual process, Kronos gets corrected, Kronos spits out a different report, and then it goes to PeopleSoft. Now, PeopleSoft is a computer, Kronos is a computer system. There is no electronic interface between these two. That is a wholly manual process. And that process being wholly manual was by design, because there is actively in process a software conversion program to bring SAP online. And my understanding is, why would we want to spend resources connecting the timekeeping program, Kronos, connecting it to PeopleSoft if we knew that PeopleSoft was going away? So instead of that, resources are going to be better spent figuring out the connection between Kronos and SAP for the long run. In the short run, this creates another manual process. You've got another manual person going from Kronos to get the data into PeopleSoft. Whenever you have manual people in the data stream, you've just got the risk of human error for number one. But the bottom line of this is, based on our understanding and based on what we tested from timesheet all the way through to general ledger, we actually did not find any errors. I mean, we tested it, and we did not find any errors. And I think it's really important. I mean, what we're talking about in terms of volume here, and I couldn't even hazard a guess as the total number of payroll entries into the system, but we tested more than 400 items. So it wasn't like we did a sample size of 20. We tested some 400 individual timesheets, but that also includes work authorizations or journal entries depending on how the situation was. And from point A to point B, we did not find any posting errors. So that is kind of the, that's kind of where that is at. Now, we fully admit in all of our discussions, a lot of people, spoke to the inefficiency and the human element of, well, we have to review it, we have to manually import it or input it. It has to be manually redone. So it's at the moment, it's definitely an inefficient system the way it's working. But anecdotally, in talking to the different folks in payroll and even central payroll, the error rate from inception to the error rate now has dramatically decreased. And it seems like at the end, because by the time we got done doing all of the interviews and everything with this, we're basically at May. And it seemed like what we were starting to hear from the people in the field was that it's getting better. It's still an inefficient process, but it's getting better. The error rate is definitely getting reduced over time, whether that's a function of additional IT changes or a function of additional training or function of additional experience. But anecdotally, people are telling us it's getting better over time, and we're having less and less errors and problems. Yeah.
And I just want to say thank you, because I can speak for myself. I'm certainly not looking for any errors. I just talked to a lot of people like you have, and inefficiencies is a big deal, which I heard you say a couple of times. But you also said that folks said that the errors are getting better, although you didn't find any. But
well, I mean the number of corrections, and the reason that's why, and I guess my point is, we didn't find any errors because these manual processes are finding them before we, they're finding them in the process.
And that was
correcting it.
That was the question I was going to ask.
Yeah.
So you're not saying that necessarily all of the interface fixes have taken place. What you're saying is it's because of the folks in there that's finding them, they're fixing
Right.
them, and so that's lessening the number of errors that people are receiving in their paycheck. That's
Correct.
basically what you're saying.
Yeah.
So, because I know that they're still working on the integration pieces.
And I will tell you that after every payroll is run, we run the exception report between Kronos and PeopleSoft, and we've been actively working that exception report for months now, literally, because when we go live with SAP, it is an interface that will run, so there will be no manual intervention. So we have to understand and identify the reasons for the exceptions and make sure that if it's a configuration issue, that we get that configured. If it's a pay issue, we set it up to ER to deal with the unions on it. I mean, all those things. So we've been actively working those exceptions for a very long time.
Okay, and let me just ask one comment, and this is kind of off subject a little bit, but on subject, okay? Because one of my concerns were issues with the fire department and FLSA and Kronos. Okay, and I was told that Kronos was the reason why there were FLSA issues, except I got an email saying that was not true. What's your opinion?
There's multiple reasons for issues with the fire department and FLSA. We have
Is any of it to do with Kronos, or any of it the issues to do with Kronos? Because that's what I was told, but then I got an email saying no. And I'm not trying to put you on the spot, and if you want to talk later, I'm happy to
honestly,
do
I'll have
that.
to verify that with I'll have to look at the details and I'll get back with you on that.
I would
Audrey.
appreciate that.
I will do
Okay,
that.
great.
Because we have Kelly shift issues, which, there's just different reasons for different things
Right,
going on,
right.
For different pay issues going
Right.
on. But I will be happy to give you an update on that.
Okay, thanks. Thank you.
Okay, so that was kind of that, and then let's see, where am I at? So then the next actually topic, also along the same line, having to do with payroll, is grants and grant payroll. Because as I mentioned, we looked at a bunch of stuff as far as how things were getting coded to the programs or whatever. One thing that the municipality does do for its grant programs, some individuals directly charge their time to the activity that's tied to the grant. And some work in multiple, maybe I'm in the Department of Health, I work for multiple different grant projects or grant programs. So those will come in through something called a work authorization. So you enter your time into one department and then it goes through a work authorization and spreads it to other places. And then sometimes what would happen is people would do their timesheet and code their time here, but then after the fact, the department supervisor would say, well, yeah, but really they were working in this other project or for this other grant, or for this other program, and then they would issue a journal entry. Or maybe the case was they were working on this grant program, but the funding hadn't come through. And since the funding hadn't come through, we didn't want to code our time over there, because what happens if the grant doesn't come through? So then that would get coded by a journal entry. The difficulty, and the difficulty with the allocations and the journal entries and the work authorization forms is that the trail gets lost from the point of original entry that is signed and approved as per the federal regulations by the employee. I certify that I spent my time on this program doing this thing because that's what the federal regs say. The trail between that certification and where it actually landed in the GL starts to get lost. Now, again, we tested the heck out of it. We tested the heck out of it. And in the end, all of the paperwork was in order. I mean, it appeared to all be in order, and you could get from here to there through the journal entry, see the approval, see the authorization, and you could get back to the source document. But what happens is with the work authorizations and the journal entries, the trail gets muddied along the way. And so from an, again, efficiency standpoint, from a recommendation standpoint, the closer that the municipality can link, this is my timesheet and I certify that I spent my time on this project and that timesheet lands in that project, the closer you can link those two, the far fewer problems the municipality is ever going to have with a granting agency or an OIG.
And Albert, you know this very, very well, but one of the issues is that because we're in a different fiscal year than the state, so, you know, we get these continuing authorizations from the state saying, you know, you're not going to get your funding for a while, but go ahead and continue to operate, you know, we'll make you good. So I have to sign, you know, indicating go ahead and continue the work. And the problem we have is that at that point in time, for 2 or 3 months, where do you charge? I mean, what money are you using
Right.
to pay for it?
Right.
So that's part of what she's talking about. So we have to use our money.
Right.
We don't have state money yet
Right.
until we get it, and
Like
then
a
you guys
loan,
appropriate
yeah.
to it. So,
Right.
you know, we're doing something in advance of it, but that's the only way you can keep some of these programs going.
Right.
Because we're out of sequence, you know, with the state funding cycle. So,
Right.
and it's been that way for years, as you
Right,
know.
and it'll probably
So-
stay that way. But
And I think from our side, I'm not sure there is an easy fix, because like you said, that situation is going to continue. So I'm not sure there's really an easy fix for this. We would just say, to the extent, as much as you can, the closer you can align the two, the better off you're going to be, and not risk having an OIG come in and say, you know, that person said they certified they were doing this, but now it's been journal entryed over to something else.
And I think it's also a training issue with the staff. I mean, if we educate them that Kronos is our system of record, and if you worked on something, you record what you worked on. This is what I worked on. Don't worry about the funding. Funding we'll worry about when it comes over, but at least you've got the data in its pure form in the timekeeping system on the front end. And I think that's an education piece.
Yeah, I guess what I don't understand, Nan, is the mechanics of that, because you don't have the different colored money. All you have is our money.
Right.
And so what's being paid is our money. So that's the piece that I'm not sure how we fix that.
Well,
I hear what you're saying,
yeah.
but.
Well, the
but-
bottom line is if the grant doesn't come through, if you've authorized them, because you're actually authorizing
I
them to
am.
work before, and,
I
you
am.
know, based on faith, the operating fund has to absorb the cost in
Right.
the event the grant doesn't come through. So, we charge it to the operating grant until the grant comes through, and then, but at least you've got in the system of record, the timekeeping system, this is what I worked on, and that is that's pure data. Right now, we don't have it. They're saying, well, we don't have the money, so we're gonna record it over here, but if we get the money, and so there's no, we muddy what
Right,
they're
it just
working
makes
on.
it complicated, and, you know, every time when I sign off on one of
I
those
know.
things, and I have to do it quite a bit, so we
Yeah.
have continuity of the operations. It's, you know, you're just operating on good faith, but I make sure that I get a good document from the state saying, you will get the money, we promise, you know what I mean, before I do that.
And
But-
actually, they write PROMISE, right?
Right.
Oh, that's funny.
Thank you.
Okay, and so really the last comment on here has to do with grant audits and reviews, and the last few years, the federal government in particular had pushed out ARA money. You know, the Recovery Act money was flowing pretty freely. Most of that ARA money has come to an end now, but the deal now is we're all living with kind of the end repercussions of that. And one of the issues during the ARA timeframe was that the feds actually hired a mountain of new program auditors. And those program auditors have recently been let loose on the world. And so what we're seeing is this huge uptick of federal Office of Inspector General auditors showing up at our clients and auditing different grants. And the municipality itself has been on the end recipient of 3 in the last 2 years, plus another one this month.
Yep.
Another one this month, so that makes 4, as well as an additional monitoring on one of the grants. And so what we're seeing is this big uptick in federal inspectors coming in and doing audits, and it's been my experience so far that, you know, those auditors are not generalists. They are specially trained for their program that they operate in. And I want to make this clear because I don't want to make it sound like, oh, we're generalists and we're slackers. The feds actually give us the audit program that we're required to do when we do your audit. But the audit program they give us is not the same audit program that they themselves use. Theirs is much, much, much more level of detail. So I guess our recommendation is just A, heads up, this is happening and it's happening more and more. B, as we already pointed out, your grant activity is really, really big. There's a lot of money at stake. C, you know, you've already had OIG starting to come in. So I guess our point is awareness, education, training, and making sure you're dotting the I's and crossing the T's on all of your state and federal programs. Because the last thing you want is to be on the receiving end of a federal audit that's going bad because of some, you know, detailed regulation that wasn't followed all the way through.
Right, one quick question, aren't the feds over at the fire department out auditing? Or did I dream that?
That's FEMA? They very well may be, yeah.
FEMA
Yeah.
is here, but it's not just the fire department.
No, I know,
Yeah.
but that's the one that I'm aware of.
Yeah,
I guess I didn't dream
but
it.
I think we're going to be in pretty good shape. With
Okay.
that. Yeah, I'm not
That's
too
good.
concerned. We got everybody.
Because I know
together
transit
beforehand.
gets audited by the federal
Oh,
government.
yeah.
Yeah, and all that, but
Yeah.
I knew there was something. Okay,
Yeah.
thanks. Yeah.
They're actually looking at the monies that we receive through FEMA for equipment for the police department and some equipment
Right,
for the fire department.
right, okay. What about the cops grants? Are they doing any audits?
They will be. Yeah,
Yeah.
we'll get one.
Yeah, okay.
We
Thank you.
used to do some pre-federal audit reviews for the fire department, especially in those wildfire grants, so
Mhm.
they wouldn't get caught.
Right, but I guess you don't have
Because
the
we do
staff to
stuff
do
like
that
the feds
now,
do.
right?
So the fire department wanted to make sure that we would find it first, internally,
Right,
fix
right.
it, so that they wouldn't lose money.
But that doesn't happen anymore, right?
Hasn't happened lately, but
Because of staff issues for you,
don't know.
or what's the, why not, I guess is the question,
I
but
don't
we
know.
don't have to answer that today.
Well, in support of what Pete is saying, I think all the departments realize Pete would be willing to come down there and help them
Okay.
out. But what we've been doing on some of these that we've got these advance notices on,
Mhm.
just like this one that we're talking about now, you know, we got everybody together. We went through, we got the grant administrator, we got every program manager from the departments involved, and we went through the whole list. This is more of a inventory list to verify that everything that we said we bought, we've got.
Right, right.
And that we've properly got it accounted for, you know, every which way.
Right.
And so that's what primarily this one is,
Okay.
and so that's why we got everybody together.
Okay.
On some of these other ones where we may have some concerns, you bet, I'd ask Pete in a heartbeat to come
Right.
down there and help us out.
Okay, thanks, thank you, Pete.
Really, there's, and the last thing on here, there's a couple of new GASBs coming down the pike, and you can read through that. But basically, that is our report, and I know we're pushing right at 2:00, but you know, we
Okay.
appreciate everybody's assistance, and you know, in the grand scheme, the management letter, you know, we spend a lot of time talking about it. And again, I want to just, in the big picture, these are really pretty minor issues as far as, you know, the things that were found wrong as findings are very specific, and these elements are not, you know, there's nothing really mind-blowing in here.
Okay,
So-
well, I'll just have to take 2 minutes to put something together to give my audit report at the facility meeting on Tuesday, but you'll be in the audience in case I screw up.
Well,
So,
what?
does anybody have any questions, Adam?
I do have a meeting I gotta run to.
Okay.
I will be. I gotta get out of here.
Okay,
All right.
all right, yeah, we're only gonna have a couple more minutes anyway.
You sure?
Yeah, I'm sure. So,
Okay.
because there's something I want you to hear, yeah.
Okay.
Anybody have any questions? Okay, and just, I want to say thank you so much for your work. You guys have done a great job. I hear from all over the place that people, you know, in our municipality really like working with you. But just so everybody knows, this is the last year of McCunda's contract. Elizabeth right now is working on RFP because it's time to go out for bid again, and we'll just see what happens. So, well, last year was the last year, so I just wanted folks to know that. And then the second thing, the last thing on the agenda is, Amy, you're new, and and maybe nobody's seen this before, but I just wanted to let folks know that this is the only assembly committee that's required by code, the only one. And I had heard that there was some concern from Debbie Osander because she wanted to add Chugach Fire Station to the annual audit that Pete does, audit plan, and that you and Bill had talked about it, and I hadn't heard anything about it, and that you talked to Lucinda about it, and she said, don't worry about it, it would be taken care of. Is that a fact?
I actually was only CC'd on the emails. I haven't had direct conversations with Lucinda or Debbie on that.
Okay.
But I probably would like to talk to you offline because I think
Right.
it probably would be appropriate.
Okay,
to audit.
and the only point that I'd like to make, the only reason why I'm bringing it up is because it's real clear in the code that this committee reviews and approves the audit plan and also reviews any additions to the audit plan. So, not that I'm trying to
But it
be
should come through this
arrogant,
committee.
but this
Yeah.
is the process, the only committee required by code, and I just wanted to make sure that everybody knew that.
I appreciate that
You're-
because, like
you're
I
so
said,
welcome.
I've just been on the outside watching their emails go back and forth.
Right. And the code also says that, and it doesn't have to be me, it can be anybody, and it hasn't always been me, but the chair, an assembly member is always the chair of the committee. But anyway, that's it, that's all I have to say. If anybody has any comments, now's the time. If not, we're gonna adjourn. Okay.
I just
we're
want to say, as
adjourned.
a first member, as my first audit committee, this was fantastic.
Oh,
So,
good.
thank you, everybody. It was very informative.
Thank you.
Yeah, this is the most fun I've
Thank you,
ever had going
everybody.
through an audit.